What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If that's something you'd like to listen to, we welcome you to subscribe. Otherwise, you can support the channel if you like, share, or even comment down below. It helps our content get out and we appreciate the support. So for today's video, I'm just going to be talking more generally on the changing environment of business credit. Now, for the past couple of years, there's been a lot of interest in building business credit. However, there's a lot of misinformation out there in terms of, I would say more so when it comes to expectations. Now, this has been marketed and oversold where, all you have to do to get business credit cards, business loans, lines of credit, all you need to do is get, Uline, Quill, Granger, and a handful of other net 30 vendors. And then you can just walk into Bank of America, American Express, Chase, and get a business card with no PG. Now, that couldn't be further from the truth. Now, the context that's left out of that, right? So business credit scores alone, you're Dun and Bradstreet, that's not going to get you an approval by itself when it comes to bank issued credit. Now, you can get vendor credit, right? You can get Home Depot, Lowe's, Sam's Club, all of that just based off business credit, your D&B and your Experian. You could even get business vehicles with your business credit. So there is value, but I think where the confusion lies is, this idea that all you have to do, so if you're a startup business and all you do is get these net 30s and then you can go get business loans, and that just does not happen. The context that's left out is that the businesses that were getting those approvals, right, they weren't using business credit by itself. They were supplementing their Dun & Bradstreet, their Equifax, their Experian business credit reports, along with their business revenues and their business tax returns. But I think how it was marketed was that all you need to do is get the net 30s. You don't need any revenue. You don't need any income or anything like that coming in, no tax returns. And that just does not work. There's not one business credit card that you can get approved with only by your Paydex score, right? So that's just one thing that it really bothers me too, because I get emails all the time about, what business credit cards can I get? I have an 80 Paydex. There's none, if you don't have revenue and tax returns and things like that to supplement that. And for the most part too, a lot of business credit cards, you're also going to need to have decent personal credit in order to personally guarantee those. So, building business credit is not a substitute for bad credit or for a lack of a business, right? A lack of revenue, right? You're still going to need to be transacting. Now, a lot of that information, like I said, that was from several years ago. Right now, we're in the fintech era, and I don't know if, people have taken notice, but fintechs are really changing the entire financial ecosystem, the landscape, how businesses transact, how businesses actually get access to capital. And one of the biggest catalysts in the fintech space is a platform called Plaid. Now, Plaid is a fintech service provider. They enable financial institutions and fintechs to be able to get real-time account balance information. They can do identity verification. They can do historical balances. So they're really empowering financial institutions and fintechs with this banking data. And a lot of fintechs now, as some that we've covered on this channel, you have like a Divvy, you have Ramp, you have Brex, you have Torpago. They're looking into your banking activity. So one of the suggestions that I would give going forward for anyone who wants to get access to business credit cards, business loans, lines of credit, things like that, with where the current landscape is heading, don't focus on, building net 30s, spending all this money to build, your Paydex and stuff like that, when it's not really going to unlock what you really want. And that's the business credit cards. So I would say focus on your business banking data. Now, I know a lot of people use, Cash App and PayPal, Square, Stripe, some of these other money remitters, right? What you're going to want to do is make sure that the transactions under your business are going through a business bank account, because that data that's being generated, that banking activity, is going to position your business for more credit cards, lines of credit, and things like that. Now, as I mentioned, Plaid is in over 2,600 fintech apps. And back on October 29th, they were acquired by Visa. Visa, which is the largest payment network in the world, bought Plaid for $5.3 billion. Now, this is a fintech. Plaid raised about $350 million, and they were acquired for $5.3 billion. So you already see you have this large entity that obviously sees the value in a platform like Plaid, and you're going to see so much more of it. So I know there were a lot of people, hey, are they going to steal my bank account information? No, it's completely secure. It's just read access. So they're just pulling out the data and enabling these fintechs to analyze that. Now, I think this is great because traditional credit scoring systems, they're looking backwards to determine whether or not to approve you, right, based on your past performance. Whereas these fintechs that are using the Plaid platform, there's another one, MX, they're looking into your current banking activity. So that's going to give more of a granular and up-to-date picture of your financial situation versus looking at your credit, right? Because you might have had a late payment from 6 years ago that's still reporting, or a collection from 5 years ago, and that's not a true assessment of your current financial situation. And I think that's where a lot of people kind of get lost in the shuffle when it comes to these traditional financial institutions that use, the current credit scoring to determine approvals, because it's looking backwards. So if there's anything deemed high risk or something that they don't like, that could be the reason for you not being able to access credit. I think with the fintechs looking at your real-time banking data, that's going to enable so many more people to get access to credit, and is why this fintech takeover is really a game changer. They say either get with the times or get left behind. So going forward, focusing on that banking data, there's going to be a ton of fintechs too, even next year in 2021, who are going to come out with more products that are looking at your banking data. So that's one way that you could be able to get access to funding even quicker than you would, going through net 30 vendors and things like that, or going through traditional financial institutions where normally you have to wait until you're 2 years in business because they require 2 years of tax returns. So I just wanted to, have this overall discussion. Let me know your comments down below. What do you guys think about the fintechs and the whole process of building business credit? So that's all I wanted to cover for today's video. Until next time, y'all take it easy, and we'll talk to you soon. Peace.